Good morning, everyone. It's 10 o'clock. I wanted to get started on time. I appreciate everyone joining on the call. This is Barbara Stoliker. I'm with Art Jeter and Company, and I run the short-term care department. A little bit on me. I've been in long-term care since 1987, a long time. And I've always been running the long-term care department inside of a brokerage. About 5 or 6 years ago, I started to notice what everyone else was noticing, and that was that our declines were quickly starting to outpace the policies that were being approved in long-term care. So my job was to find some sort of revenue for the company, and I came up with short-term care. And since then, I've pretty much dedicated my career to it. I mean, after all, here I was. I had all of these people applying for long-term care who were being declined. They were willing to take responsibility for their own care. They were willing to write a check. I just had to find them something to buy. And since then, I've really delved into the marketplace. I think we've come up with the best products out there, and I'm going to tell you all about them today. So the very first question I always get is why? Why would you even talk about short-term care? Oh, my screen is not changing. There we go. Well, according to Genworth, and Genworth has the biggest block out there, they pay more claims than anyone. Genworth says almost half of their claims are for less than 1 year, and that's significant. Milliman did a study in 2010, and they found that tracks with Genworth. Just about 50% of the claims were closed within a year. 75% were closed within 2 years, 95% closed within 5 years. And actually, a person who had $100,000 in today's money could pay for 80% of all of their care. And here are some more recent statistics for you instead of some of the ones we see from 2000 or 2003. According to the U.S. Department of Health and Human Services, in 2016, the average out-of-pocket cost for long-term care services and support were $72,000. The average cost of HIPAA-level services was $75,009. And the reason they make that distinction is because HIPAA is, in 1996, is what set down the criteria for what a tax-qualified long-term care policy looks like today. And to get HIPAA-level services, you must need care for at least 2 of 6 of the activities of daily living, or you must be cognitively impaired, and your care must be expected to last 90 days. So that's the difference in what HIPAA services are. The average duration of claim for men is 1.5 years, and for women it's 2.5 years. So the reason I bring these up is because I want you to know that for many people, a short-term care policy, which pays for care for maybe a year or maybe 2, will be enough for a lot of people. They don't need to be spending thousands of dollars getting 5- and 6-year benefits and lifetime benefits. Most people will do just fine with a year or 2. And a 2-year plan with one of our carriers can provide somebody with as much as $170,000 in total benefits. I think that surprises a lot of people that the short-term care can pay that much, but I'll show you more down the line. So again, why? Well, a lot of consumers just won't buy traditional long-term care. They get a look at the premiums now and they get scared and they don't want to pay that. Short-term care, some carriers can offer up to 2 years in benefits, or you can do what we call stacking, where you can buy a policy from one company and a policy from another, and you could end up with 3 or 4 years of coverage if that's what you really want. In short-term care, there is no 90-day certification. Now, a lot of people who sell long-term care don't realize this unless you're an expert, but the 90-day certification is different from a 90-day elimination. As you know, most long-term care policies are sold with a 90-day elimination policy. But then the client must meet the certification. A medical professional must state that their care is expected to last at least 90 days. So if your client has a Genworth policy with a 0-day wait for home care, and they get a hip replaced, and it's an 8-week recuperation period, that's only 56 days. So whether or not they have a 0-day wait won't matter. They're not going to get paid a dime out of that policy. It has to be expected to last at least 90 days, and that doesn't exist with short-term care. Short-term care can help clients get through elimination periods. In certain parts of the country, particularly the Northeast, care is often $300 or $400 a day. So a 90-day elimination can cost $20,000, $30,000. A short-term care policy for 90 days or 100 days can cover that cost. Previous declines are okay. In fact, nobody even asks about them on short-term care. We don't care if your client has been declined by anybody else. We don't care about the reason they were declined. They're okay. You can apply for short-term care. And no special CE is required to sell these policies. You need a health license. That's it. They're generally much easier to qualify for. 10 or 11 health questions, and the client does have to answer no to all of the health questions. Most of these policies are issued in less than 2 weeks. Weight is not as important as it is with traditional long-term care carriers. I mean, anybody out there has, I'm sure, as salespeople, you've all come across people who were less than truthful about their weight, and those people are normally women. But doesn't matter with short-term care, not like it does with long-term care. The premiums are expected to be very stable. These are very limited benefits in what they pay. If you're an actuary, you should be able to price what a one-year policy for $150 a day is going to cost the company over a period of years. It's not like traditional long-term care. The factors that cause the rate instability in traditional long-term care are not present in short-term care. And comorbid conditions are viewed separately. With traditional long-term care, if you've got a smoking diabetic, he's probably not going to get traditional long-term care. But that is not an issue with short-term care. They look at comorbid conditions separately and very differently. So here are some examples of people who could not get traditional long-term care, but we could get them with short-term care. Here's Wonder Woman at age 65. She was declined because of arthritis, tramadol use to control the pain. She had a stroke 2 years ago, but she's recovered, and she failed the cognitive exam. This lady is a flat-out no for any kind of traditional long-term care. Medico, which has a short-term care policy, we can get her $150 a day for 1 year with a 0-day wait. And again, a 0-day wait with short-term care is just that. And that premium for her would be about $102 a month. Aetna, we can get her $150 a day for 1 year in a facility plus $600 a week of home care for another year, total of 2 years of benefits. And that would only cost her about $107 a month. GTL's Recover Cash, we can get her $150 of facility benefit for 1 year, plus $75 for home care for 180 visits. That's another 6 months. And that would only cost her $82 a month. So these are really good options for a person who couldn't get anything else. You could buy all three of these if you wanted. You could stack two of them. And then there's one more. GTL has a short-term home health care product that we'll talk about later, and it's a little bit different in what it offers. She could get up to $300 a day for skilled home care and a $600 prescription drug benefit, and that would only cost her $47.41 a month. So I'll let you do the math on that. And then we have Rocky. He's 70, got declined for sleep apnea, non-insulin dependent diabetes, high blood pressure, and he has memory concerns. Not formally diagnosed, though. It's just the kids coming in the office saying Dad's starting to forget stuff. So Medico, same deal, $150 a day for 1 year, $151 a month. Aetna, $150 a day for a year, a 0-day wait, $600 per week for home care for a year, about $170. You can see how reasonable these are compared to traditional long-term care. The GTL Recover Cash, $150 a day for facility for a year, $75 for home care for 6 months, $127.15. And here's that GTL short-term home care. Again, $47.41 a month. Now, that last GTL, that is a very limited policy, but the selling point is he's Going to pay $47 a month, and he's going to get $600 back on his prescription drugs. That should be a no-brainer. Sorry about that message there. And lastly, Captain America, who's age 75. He's a smoker, he's overweight, he's got diabetes, and he had a heart attack. His weight is going to keep him out of GTL and Medico. They do have weight charts, but they are more liberal than traditional long-term care. So with him, we're just going to go with Aetna. We're going to get him the same $150 a day for the facility, $600 a week for home care. That's $246 a month. Or we can get him that GTL plan for $300 a day for skilled home services and $600 a month. $600 a year for prescription drugs, and that would be $64 a month. So here are some facts that I'd like you to know I think might help you in your marketing. Our typical age of buyer is 65 to 74. I will tell you that most of the people in our brokerage who look at short-term care have applied for traditional long-term care and got declined. Most people buy 360 days worth of coverage. And this, again, I think that this leads back to the fact that they really wanted traditional long-term care. So when they have the opportunity to buy something, they max out what they can buy. Most policies overwhelmingly are for $100, $150, or $200 a day. Although we can do it in increments of 10, like $120, $130, $170, that generally doesn't happen. This is normally what we sell or what the clients are buying. Our average premium is $1,100 a year. It has been that way since I've started in short-term care. It doesn't seem to change. So now we want to look at what carriers do we have. Now I'm going to talk to you about a multitude of carriers that we have and go over a little bit about what they offer. And I'm also going to have a list at the bottom of the states that they're approved in. If there is one downside to short-term care, it's that it's not approved in every state. Some states don't have anything at all. But there are plenty of states that do have a lot of options. So here we go. The first product I want to talk to you about is Aetna's Home Care Plus. This is offered as a standalone. It is only for home care. The client can get up to $1,200 a week for a year for care at home, and that's indemnity, by the way. If they only spend $300 in a week, they'll still get the whole $1,200. Aetna does not have a weight chart, so weight is not considered. There's no phone interview. There's no cognitive interview. They don't order medical records. You can go up to age 89. And for this policy, neither ADLs nor cognitive impairment is a trigger. The trigger to get benefits out of this policy is you must be receiving home care at least 3 days a week for at least 1 hour a day. And on these slides where you see the rates, I maxed out the benefits. So for a 65-year-old person, for a maximum $1,200 a week for 52 weeks, the premium is $101.73. Now, I also want to mention that this policy is available to people who have already been diagnosed with Parkinson's or Alzheimer's or multiple sclerosis. As long as it's early in the diagnosis and they're still independent and can do their activities of daily living when they apply, they can get this policy. What Aetna checks is you have to say no to everything on the application, and there's only, I think on this policy, there's only 4 or 5 questions. And then we do a prescription drug check, and they have a drug guide. And the drug can't be in the drug guide. And those 2 things, if you can make it past those 2, caveats, I suppose, then you can have this policy. The step up from that is called recovery care. Now, recovery care is more like traditional long-term care in that it covers nursing home, assisted living, and home care, all levels of care. And the home care is actually that Home Care Plus. They just put it on here as a rider. So a client can get up to $300 a day for the facility, up to $1,200 a week for home care. Again, weight is not considered. When you max out this plan, it ends up being 2 years of coverage. There's no phone call to the client, no cognitive interview. They go up to age 89, and for a person age 65 with a maxed out plan, the premium is $211.35 a month. If there's a downfall to this product, in my opinion, it's that it doesn't offer a cost of living rider, but that's about it. GTL is Guaranteed Trust Life, and by the way, these are all A-rated carriers. Some GTL's A minus, Aetna's A, but we're talking all A-rated carriers here. Recover Cash is their comprehensive, kind of like Aetna's Recovery Care. It's a split benefit. The nursing home is purchased separately from the home care. You can get up to 12 months in the nursing home and 6 months of benefits in the home. 12 months in the nursing home and 6 months at home. I did say that right. For a total of 18 months of benefits when you max out the policy. They are all indemnity benefits. They're paid directly to the client. They're paid in addition to any other insurance that pays. Most of these policies are issued in 2 weeks, and GTL does have a cost of living rider available. This is a great plan for you to look at for your female clients. As we know, women right now in traditional long-term care are getting beat up on premiums, especially if they apply without a spouse. You can get them a nice facility policy with this with a cost of living rider. So what I like to do is I buy them GTL with the facility. I get them $200 or $300 a day with a 5% simple, and then add the Aetna home care policy onto it. And then we've got them both covered for 2 years. GTL, here's their almost guaranteed issue home care. This is one of the most popular products in the country today. This pays an indemnity benefit for skilled care at home. So it's very limited in scope. It's physical therapy, speech therapy, occupational therapy, those kinds of therapies. It'll pay a defined dollar amount if you receive those in your home, plus an RN visit or an LPN visit. And then it pays that $300 or $600 drug reimbursement, depending on which program you pick. There's an A, B, or C. I usually talk about B because that's the $600. Most of my agents are using the phone application. You enroll people right on your phone, and by the time you stand up from your appointment, your client has a policy number, they have coverage, and if they wanted to go to Walgreens tomorrow and get some prescription drugs, they can put a claim in for that right away. They do have some additional riders available depending on what state you're in. There's a hospital indemnity rider, there's a dental vision rider, there's a critical illness rider. Those aren't available in all states, but your state will have one of those or two of them. And the premium for a Plan B for a person age 65 is only $47.41 a month. This is probably the best buy out there, and especially as an agent, I can tell you I own one. I'm 61 years old. My premium's $38 a month, and I'm getting $600 a year back on my prescription drugs. It was a no-brainer. I mean, it's like the company's paying me to have it. And then we also have Kemper, which was probably the industry leader in the guaranteed issue home care. It looks a lot like GTL, but the benefits are a little bit lower. And of course, it's reflected in the lower premium, which is $36.20 a month, but the same thing. Only 2 health questions. It does have a drug reimbursement. It's $250, and it pays for skilled care at home. So if you've got somebody who wants something and they absolutely can't qualify for anything else, they can probably get the Kemper or the GTL. And then there's Medico. Medico has their short-term recovery care. They've probably had this product longer than anyone else. Again, there's no cognitive exam, no personal interview. There's only 11 health questions. I have to say no to everything. Prior declines are okay. Medico has what they call My Enroller. You do everything online. The agents seem to just love it. They also have a cost of living rider available. And one thing they have that other carriers don't is survivorship. So if a husband and wife buy a policy together, they each have identical benefits. When one of them passes away, the survivor gets a paid up policy for life. So if you're 65 years old and you get a maxed out recovery care policy, which would be $300 a day for 1 year, your premium is $203.72 a month. And then lastly, there's True Freedom. True Freedom is very new, very unusual in what it does. First thing you need to know, it is not insurance. It's a home care membership plan. The clients buy a membership plan, and then when they need the service, they call into the company and say, hi, my name's Barbara. I have the flu. I don't feel well. I need someone to come make me soup. I need someone to help with my house. And the company, which is called ASSI, will make the arrangements, send that person to your house, and they will provide the care. The member doesn't pay anything for that care. They just continue to pay their membership fees. Because it's not insurance, it's available in every single state. All the forms are the same from state to state. You don't need an insurance license to sell this, but it is distributed mostly through insurance agents. There is absolutely no underwriting. There's no age limits. There are 4 plans available to this where they get increasing amounts of hours that they buy. It's field issue. When you sign somebody up and you walk out the door, they are covered. And the claims process is exactly as I described. Your clients call into the company, say that they need care. There's no forms. There's no doctor certifying. You can't do 2 ADLs. There's none of that going on. This is really original, different, and I would really look at your elderly clients for this because everybody pays the same price. Whether they're 95 or 65, they're paying the same premium. So your target market should be your current MedSup or MA client base. The chances are those people have done nothing to plan for any kind of care. If you ask them, what have you done for your long-term care, you're going to hear something like, take me behind the shed and shoot me. You know, Lord knows how many times I've heard that in my career. So that's where you should start. Your folks who have been declined for long-term care insurance, or maybe they think they can't get it. You know, how many times have you heard, oh, I had triple bypass surgery, I can't get that? Well, you can. And let's look at what's available. I mean, you can get them up to 2 years in some states. Saving a couple sale when one gets declined. If you've done anything in long-term care insurance, you know that when you submit apps on a couple and one of them gets declined, the other person gets mad and says, I don't want the policy either, if that's what they're going to do. Well, if you handle that upfront in the sales process and say, look, my job is just to get the application to the underwriter, but based on my experience, Mr. Jones, I think that we might have some issues here with your health. If that happens, if it doesn't come back the way we want it to, would you consider something like this? And close that right up front and give them the opportunity. Let them know that you've got some other options. And of course, single women, because the premiums here are unisex. They're not getting beat up for just being women. So with that, I think we're almost to the end of our time. Call us if you have questions. I'm happy to give you a copy of these slides. That's our number here at ArcJetter. My direct extension is 1126. I'm happy to help you, get you quotes, get you up and running. Many of you are already appointed with these carriers, so you're ready to go right away. And unless we have any questions, you can type them in the little question thing. I'll see if there is. So Beverly said, yes, I can give you these slides after the webinar. Do we have any other questions? I don't see any. Thank you so much for your attention today and your time, and I hope to talk to you soon. Bye-bye.